Hey everyone, how's it going? Hope you guys are having a great day. So let's get started with analysis here today on the S&P 500. First of all, the inflation data came out perfectly fine. It was just a little bit higher than the previous month, but it was less than expected. So it was cooler, and you can check out their data at Trading Economics if you have not seen it. However, the market still is in this stubborn price channel, which is holding up amazingly well. So if we just see this price did try to get above this downtrend line today, but it couldn't close above. We still failed to close below the trend line. Okay, so this downtrend line and this downtrend still stays valid as of right now. Now, if we get into the smaller time frames here and looking at the 2 hour on the S&P 500. This is the area that I have highlighted, and this is the check mark that I have above here that we need to get above this downtrend line on the smaller time frame close, and then we get a really big move to the upside up until 420, right? I did mention yesterday that even getting a 10-point move from 398 to 408 would have been decent, but it's not enough to get above this level. Sellers came in and pushed the market down. Now, that could be for multiple reasons that, this is priced in, and this is predicting that maybe we do have further pain ahead. But the next coming days will tell us. And I did also mention that VIX was extremely high yesterday, volatility with the rest of the market shooting up, and that a lot of premiums would get absolutely crushed today. So if you had a swing position and you're trading options, you would see that. Now today, S&P 500 did well. Even look at the sectors, there's some nice rotation. Airlines came down, XLP came down, consumer staples, and also retail ETF came down as well. The ones that were up the most, if we just look at it, was if we look at this is real estate, XLE energy, XOP oil and gas, home builders, and communications, which is interesting to see which sectors have moved up. But still, overall, the S&P is holding on to this price channel with dear life. But what we have to be is we have to be objective, and when we look at something, if S&P 500 can't get above this level, which is the price action of 410, we continue to consolidate here, which is fine, right? Because tomorrow we have FMOC and Jerome Powell's coming out. Expect a half a point rate hike, and we'll see what happens afterwards. But right now, if we look at this market conditions on the S&P 500, there's two levels that are important here. That is right here above the 404 and the 407, so which is a 410 because there's 6 points here, give and take, and below the 395 and the 390. So these two levels are very important, and what happens in between is going to be just a volatile, choppy move. Once we clear these levels, we can expect a big move, and then that's when we can get in. That's why you have to be patient. You have to let the trade come to you. Don't take the trade ahead of time. I did take a small trade when it went below this. I had logic set up, had my stop loss. It hit my stop loss. I'm out of that trade, but waiting for the next trade to come here. Okay. Looking at triple Q, if we look at the daily, as you guys can see in my previous videos, I've mentioned this zone over and over again. This is where price consolidated, sold off, consolidated, came down, came back up here, rejection, came back down here. Now, as the market wanted to go back and test this level again, is holding it really well, right? The other thing is price is consolidated between a 280 and 298, or which is or 300. So this 20-point move quite aggressively and quite volatile here. What we want to wait and see is what happens. We needed a clear break above this so we can get above this downtrend line and make a quick move to the upside. But once again, the really big move will come once we get above the 316 or the 317 level and push our way up to 330. But that needs to be followed by positive news in the market. That's going to be market moving, right? There needs to be some sort of catalyst that will drive the market forward, either some sort of settlement towards the Ukraine conflict, some sort of fixing of the oil crisis or the supply chain crisis that we have going on. There needs to be a catalyst for the move, right? So right now, we're still struggling to find a catalyst. The market is still undecided in which way it wants to go. Looking at IWM, to start off on the daily time frame, IWM, a double bottom pattern still holding up, but this is looking like more and more like a bull flag now. If we just look at it this way, right? So it's holding on to this pattern. So if this does bounce from here, we can get a push above. Otherwise, this is a break of a downtrend that I had drawn here before. Okay. So if this downtrend breaks, we're going to get a nice move to the downside from here on the IWM. Otherwise, we're looking at a bull flag, which is holding up pretty well consistently on IWM, and we can possibly get a move to the upside. But there's also, you can see there's trends within trends that are happening right now, and they're going to continue to consistently happen on a day-to-day basis. So I would be mindful of this and just wait and see what happens here. Tomorrow, the Fed announcement on the interest rate will be market moving, and we'll keep an eye on it. IWM big level to be is 192 still, and we'll wait and see what happens there, right? Looking at Dow Jones, like I said before in my previous videos, this level right here at 335 holding up really well. We might come back and test this level, but today there's a huge spike, unable to hold, right? So breakouts can happen, but we gotta wait for the retest. The retest is important on breakouts. Do not get faked, right? So if we get a breakout, wait for the retest of that same level to happen, then push above to the upside. But we're getting some nice consolidation on the upside here. We'll have to wait and see what the market announcement comes in and see where Dow Jones goes. If we get a break below this level at 334, right about here, we could get a nice move to the downside at 330. Okay, so we'll see what happens with the Dow. So far, it is trying to go up back to the bullish category, but it's unable to do so like the rest of the market. And we'll see how participation holds up, and we'll see if big money starts flowing back in. Okay, so some positive news is that yields have started to fall, but if you guys want to see year to date, okay, so as of right, so this right here, the yellow is a 2-year treasury yield and bond yield, sorry, and this is the 10-year. This is as of February 2022. This is when the inversion happened, where the 2 years went above the 10-year. Okay, this is something that we need to keep an eye on. All right. Last time it happened was 2018, and you guys already know what happened after that. Every time this yield gets inverted, it is followed by a correction or some sort of market moving, situation that we have, right? So if we look at the monthly time frame, you can see right here was around the dot-com bubble, right? And then right here we have the financial crisis, 07, 08, right? And if it keeps going back, you'll see what happens with the treasuries every time they've inverted in the past, right? So always go back and look at the data and see what ensued following that. So just keep an eye on this when the yields invert. It usually takes about 18 months. Well, I would say 12 to 18 months for it to pan out completely. So we're still within that cycle. And the other thing I want to point out, which lines up with that, is the VIX. The VIX, yes, it went up yesterday. Today came back down like the stock market. This should not be flowing with the market, right? This should be flowing opposite. If the market's not able to go up, that means there's uncertainty, and the VIX should start to come up. If the market is coming down, if the market is going up, there's more momentum. There's no more fear. VIX should start to come down. But VIX, we need it to be historically below 14 for us to thrive, and for fear to be completely taken out of the market, and we'll go from there. But right now, the market itself is very, very stressed out. I still think we have a long ways to go before, we actually see a bull run, but that's why you got to trade your levels and see where we go from there. And today, gold had a nice move here. Gold had a gap up, but came down as well with the market. If we just look at the picture on gold, still holding on to this pattern right here, which is the cup and handle pattern. If we look at the daily, not a lot of action, not not a lot of participation either in gold. I think people just holding on and seeing what's going to happen with gold. But I still think gold has a bright future ahead of it as long as we hold on to this level right here, which is the 146. If 146 holds on, we got a decent chance at breaking out. Right now, we need some sort of consolidation to go sideways before we break out to the upside. All right, guys. This is my analysis for today. Tomorrow we have another volatile day. Be careful when you trade, and stay safe and make some profits.